Welcome. Today we're diving into something that might seem distant, but actually impacts your daily life in more ways than you think. It's June 11th, 2025, and we're talking about your money and the Federal Reserve, often just called the Fed. Whether you realize it or not, the Fed's decisions ripple through your wallet, your home, and your future plans. Think of the Fed as the country's financial thermostat, constantly adjusting the temperature to keep things comfortable for the economy. When inflation heats up and prices start rising too quickly, the Fed raises interest rates to cool things down, making borrowing more expensive and encouraging people to save. Now, with inflation easing to 2.5%, the Fed is considering cutting rates. But why should you care about these numbers and decisions? The Fed's rate directly affects your credit cards, how much interest you pay when you carry a balance, and how quickly your debt can grow if you're not careful. It also impacts car loans and mortgages, changing your monthly payments and even determining whether you can afford that new car or dream home. And don't forget your savings account. When rates go up, you might earn more on your savings. When they go down, your interest earnings could shrink. Every move the Fed makes changes the cost of money for all of us, affecting how much we pay, save, and even how we plan for the future. So when you hear about rate cuts or hikes in the news, pay attention. These changes are your opportunity to make smarter financial decisions, whether it's refinancing a loan or adjusting your budget. Understanding how the Fed's actions affect your money puts you in control of your financial future, helping you make choices that benefit you and your family. Let's break down what all this really means for you and how you can use this knowledge to your advantage. Let's start with credit cards. Credit cards are one of the most common forms of borrowing, and their interest rates can have a big impact on your monthly budget. Most credit cards have variable rates tied to the Federal Reserve's benchmark rate. So when the Fed cuts rates, your card's APR usually drops a little too. This means you'll pay slightly less interest on any balances you carry from month to month. But don't use a lower rate as an excuse to rack up more debt. Even a small drop in interest doesn't make high balances safe or affordable. Instead, take advantage of lower rates to pay off high interest balances faster. Every dollar you pay above the minimum goes further when rates are down. For bigger purchases like buying a home or a car, lower rates can mean real savings. Your monthly payments could be lower, and you might qualify for a larger loan, making your dream home or car more affordable. If you already have a mortgage or student loan, now might be a good time to consider refinancing. Lower rates could help you reduce your monthly payments or pay off your loan faster. But remember, refinancing isn't free. Always check if the long-term savings outweigh the upfront costs like application fees or closing costs. And don't be tempted to borrow more just because you qualify for a bigger loan or lower payment. More debt can mean more risk. Stick to your budget and use lower rates as a tool to strengthen your finances. This is a chance to get ahead, not fall behind. The real goal is to improve your financial health, not to add more debt or take on unnecessary obligations. Be disciplined and always put your long-term security first. Use this opportunity to build savings, pay down debt, and plan for the future. Lower rates are an opportunity if you use them wisely. Make every dollar count, and let today's lower rates help you build a stronger financial tomorrow. Savers have enjoyed high yields, but rate cuts mean those returns will drop. If you rely on savings interest, expect your income to shrink. Consider locking in a longer-term CD now to secure today's rates. As savings rates fall, some investors move money into stocks for better returns. Lower rates can boost stock prices, but remember, more risk comes with more reward. Review your investment mix. Are you diversified? Does your portfolio match your goals? Don't chase returns you're not comfortable with. If you're unsure, talk to a financial advisor. Protect your money and plan for the future. Knowledge is power, so act on it. Staying informed about your finances is the first step toward making smarter decisions. Take a little time each week to read up on financial news, trends, and tips. The more you know, the better prepared you'll be to handle changes in the economy or your personal situation. Review all your loans and note the interest rates. Make a list of every debt you have, from student loans to car payments and credit cards. Understanding exactly what you owe and what it costs you each month is crucial for making a plan. Watch for refinancing opportunities as rates fall. If you see a chance to lower your payments, don't hesitate to explore it. Tackle credit card debt aggressively, since high interest can quickly spiral out of control. Consider balance transfers or consolidation to lower your interest. These tools can help you pay off debt faster and save money, but make sure you understand the terms before you commit. Check your savings account rate. Many people leave money in low-yield accounts without realizing they could be earning more elsewhere. Move your money if you can get a better return elsewhere. Even a small increase in interest can add up over time, so don't be afraid to shop around for the best rates. For cash you don't need soon, look at locking in a CD before rates drop further. Certificates of deposit can offer higher returns if you're willing to set your money aside for a while. Don't let cheaper borrowing tempt you to overspend. It's easy to justify extra purchases when interest rates are low, but remember, debt still needs to be repaid. Stick to your budget and focus on your long-term goals. Review your spending regularly, and adjust as needed to stay on track, even when it's tempting to splurge. Use these changes to your advantage, not as an excuse to lose discipline. Every smart move you make now will pay off in the future, helping you build a stronger financial foundation. Smart habits build financial security. By taking these steps today, you're setting yourself up for greater peace of mind and more opportunities down the road. You control your financial life. Economic shifts are opportunities to act, not reasons to panic. When you know what's coming, you can prepare. Review your loans, savings, and investments before rates change. Being proactive builds confidence and security. True financial freedom isn't about having millions, it's about making the most of what you have. Use today's information to make a plan and take action. The steps you take now will shape your future. Stay informed, stay prepared, and stay in control.